Good morning, Armor Insiders, and everyone else deciding to join us for our live look into our virtual hedge fund morning meeting and how we get started every day. We're going to go over our swing strategy, which drives all of our risk decisions, why we're risk off now, what may happen next. So we'll go over the big picture. We'll talk about how we run our flagship fund, how much cash, where our allocation is invested right now. And then we'll have top stocks to watch on the whiteboard. We might add to the portfolio top stocks that we've already added. We call those stocks to buy that are still in buy zones. We'll go over all of that. If you'd like to join us on the desk all day, hey, go to our website, armrinvesting.com. Go ahead and fill out the application, and we'll see if it's the right fit for us and you to join us on this desk. This is a real hedge fund desk. We're managing assets like a hedge fund. Private capital here for me and portfolios that I manage. Armor Insiders for you, making your own decisions, following your own strategy. This is a strategy session. Whatever I say, whatever you hear anywhere else, at the end of the day, only you know your risk tolerance, what your goal is, what your strategy is, and you've got to execute that. You've got to be the smart money. Now, let's dive in before we get to our highlighted stock of the day, which you can see right there, and it's pretty sexy. We're going to talk about the indexes because that drives all of our risk decision. Okay, so we have a simple tool. We call it the risk monitor. We follow 10 indexes, algorithms designed for each index, the volatility of each index. And what we're looking for, it's very simple, is confluence. When all the indexes do the same thing, generally it means institutions are driving that direction. And then you get sustainable moves. In the case of risk monitor green, that means a sustainable move higher. We could capture some serious alpha on that. And in this case, we've just gone risk monitor red last week. And so let's discuss risk monitor red. It's not really the same thing as a green. And the reason is the markets generally go higher, right? Markets are usually going up. And then they have these breaks in the action and violent moves lower that last a short period of time and then right back on the gravy train. And that's because of money supply, right? M2 keeps growing, interest rates go lower. So the guy who's out there calling for Armageddon and calling for a stock market crash and calling for a bear market, that guy's wrong, like 80% of the time. So it doesn't pay to live there. Number one. Number two, risk monitor red is telling us right now there's no confluence. There's confusion. We have some of our major indexes breaking down. Some continue to levitate. So when you get a muddled view like that, the easy money that was made from risk monitor green, which started April 24th and ended really August 1st, end of the day on the 31st. So August 1st was our first day of risk monitor red. That easy money's gone. And one of two things is going to happen. Either we're going to build a base, and if this whole year is bullish, if you want to argue that way, which I'm happy to argue, because we've got money supply growing and probably rate cuts between now and the end of the year. So it's hard to build up a real bearish story right now. So that would make me say, well, my top scenario right now is probably a 4 to 7 week consolidation. That 4 to 7 week tight pattern during what is typically a very difficult time for the market. August, September, October, those are their tricky months. Things get very thin in August. A lot of fund managers leave the desk. Let me show you something that happened in the last 20 days. And no doubt, this is what the risk monitor is sniffing out, and it's why we're risk monitor red, because that monitor is designed to tap into the flow of institutional capital, hedge fund capital, smart money capital, okay? And so sometimes equity prices levitate and big capital is hollowing out underneath, and then you get the swift decline in the market. So we need to follow that kind of money. So let me show you something interesting. We've just witnessed the fastest collapse in prime brokerage gross exposure at Goldman Sachs over the last 20 days. The last time we saw a collapse this big, 2020, the end of it. So what does that tell us? Well, first of all, prime brokers, Goldman Sachs, that's hedge funds, okay? Hedge funds are sucking capital out of the market as fast as they can over the last 20 days, which means, put it into simple terms, they're selling into the strength. They're selling into the strength. Is this because they know something? They think the market's going down? Not necessarily. It means they've had a huge year and they're going into August and they're going to go have vacation. and they're just cleaning up the books, getting rid of margin. You don't really know what this means. You're going to see a lot of statistics like this. The market starts going down. Every Chicken Little is going to come out and tell you the sky's falling, the market's going to crash. It doesn't work like that. It's a warning sign, right? Something's wrong with that. Okay. Go back and look here. This is January 20, right? So this is right before we had a 6 weeks collapse in the market because of COVID. So what we're seeing the last 20 days is the same type of selling we saw right before the collapse. It only lasted 6 weeks, by the way, but the COVID collapse, then the market skyrocketed as, of course, the Fed started flooding the system with capital because we were on lockdown. So I show you that not to say, oh, market's going to collapse right now. I don't know that. Sometimes hedge funds are out in front. They have information that you and I don't have. Back then, hedge funds understood what was going on right before the pandemic, and they were taking money out of the market as fast as they could. Or they'd had a real nice run, and they just decided to book gains. You don't know, okay? But the risk monitor helps us understand that flow of capital. There's a major draining of institutional capital out of the market as it skyrockets. And we call that selling into strength. And we want to react like smart money institutions. So we do on this desk. We are a hedge fund. That's what we do. We're a virtual hedge fund. You guys are managing your own capital. We all do it collectively. Okay? And it's kind of fun. You guys are all over the world. I love you guys. From Poland to England to Israel, to Hong Kong, to Argentina. I love you guys. We make a real interesting virtual hedge fund together. So to wrap up this discussion right now, something is spooking institutions into raising cash. The best case scenario is it's just been an unbelievable year. Everyone's going to go away for August. They're booking some gains in front of what are typically a couple of tough months. And so we're looking for a 4 to 7 week tight pattern up here. And then we break out and run into the end of the year as the Fed starts cutting rates. That would be, I would say that's probably my top scenario. I think that's what's going to probably happen. I hope that happens. I want to be bullish. I want to get back on the bull. Worst case scenario, smart money knows something, and they're selling aggressively in the last 20 days as the market goes up. Who knows what that thing is? I don't know. So what we do on this desk, the flagship fund, let's get over to that and see how are we managing capital. If somebody's using just the risk monitor to manage a portfolio of swing trading indexes, which we call our macro fund, that fund's 100% cash when it comes to indexes. There's no index exposure there. What we can do with that capital is put capital to work in non-correlated assets, non-correlated, to the risk monitor. Gold, precious metals, commodities. In fact, sometimes these things are negatively correlated. Think of 2022. In the first 6 months of 22, oil stocks went through the roof as the market was imploding. It was an unreal 6 months of alpha for anybody investing in energy. Okay, so when it comes to index swing trading, that's all cash for us. We've made our money. And we'll wait for the next risk on green signal, S&P algo entry point. We'll put capital to work again, whenever that is. The rest of our portfolio. So if the flagship fund uses about 50% of its capital for index swing trading, and the other 50% we put out into investments. And let's go over what are some of our top investments right now. These are stocks, I would say, that we already own. I wouldn't be buying them today, but if they come back down into buy zones, I probably would. Okay, so we added to our gold exposure, our metals exposure yesterday morning, early, in fact, in the pre-market when it was lower. GDX closed higher. That looks like a major breakout of a really sweet weekly chart pattern on gold stocks. All right, that's a huge weekly pattern on gold with a cup and handle and a breakout this week. So something special is going on there. We put that next to our physical gold position. We already have that position on. Somebody could invest in silver if you want. I don't have that on right now. But GDX was the highlighted stock of the day in yesterday's morning meeting, and we were buying it pre-market. We've been trading it on and off in here. You could see these entry points, 1, 2, 3, and 4. These are all algo entry points for us, and this is the real breakout here. XLU. Look at the stocks that are in our portfolio right now. Gold stocks, utility stocks. Now we have our favorites. You could just own the index, or you could rifle through some of our favorite names after earnings. They've done real well, like Dominion, Duke, AEP, Southern Company. I even like NEE, even though the stock was down on earnings. I even like that stock. So utilities, precious metals. And let's go over to our highlighted stock of the day, the stock that is about to leave the station. We talked about it 8 days ago. And that's YPF. This is a fun way to put some capital to work in two different themes. The theme of energy. And energy stocks just been absolutely annihilated. So is money going to rotate back into that space? There are some names out there to cherry pick right now. I wouldn't say it's a tsunami of investing capital, but I'd say there's some ideas like YPF that are showing up. Perfect chart patterns. You're benefiting from the rebirth of Argentina as an economy and a country. And you're benefiting from perhaps a shift in capital into energy. You know why that's eventually going to happen? It has to happen eventually. I'm going to show you a chart. Don't get too excited. This is a long-term chart, okay? But global oil production's on track for a massive shortfall. Now look, this goes out to 2030, 2040, 2050. So that's like a long time in the future. But the fact is, if you don't start producing wells, finding energy, producing wells now, these things all take time. By the time you get into 2028, I mean, we're having a massive drop off. This is all due to the well-meaning idiocy of climate change. I won't get into that right now. Don't debate it, okay? I understand the well-meaning part of it, but it's absolute idiocy at the rate that some countries, some municipalities, some states are trying to get there, okay? And the regulation that's been a stranglehold on this space, we're going off of a cliff, right? So at some point, that has to start unwinding. And so you get a president in this country that's starting to support the coal industry, support the natural gas industry, the U.S. production of energy industry. And you start to see countries like Poland. I just saw the other day, Poland reinstituting coal. I mean, all over Europe, people are waking up to the fact that, oops, you know, we were probably 100 years ahead of the ability for us to make that leap. Okay. Nuclear, uranium's been an unbelievable sector. But traditional fossil fuels probably going to make their way back into energy and into equity portfolios. Okay. So one way to do is YPF. That's my favorite chart of the day. We already own the stock in here. It's breaking out right now. It could be bought right here. And I'll be looking for other ideas. We saw Tidewater blow out on earnings. That's a good sign. This is a service company. So if you start bringing on new wells, which we're going to have to do, the service company is probably going to do really, really well. We've made a lot of money in Tidewater in past cycles. Probably need to put this at the top of our whiteboard after that earnings announcement. These are stocks to watch. All right. So continuing our path of top stocks to watch. You can see the charts all look the same. Peabody Coal, CNR. The coal stocks look great. HCC, those are our trifecta of coal stocks. I also like the home builders, believe it or not. These are all the types of chart patterns where I see capital flowing right now. Rocket Mortgage is one of my favorite. This is an interesting story. I'm not going to get into it today, but you can see that chart pattern right there. Those are all names for you to write down, do your own research, figure out if it fits your risk tolerance and goals. But these are the chart patterns of where capital's flowing. These are the groups and sectors that are not correlated to the risk monitor. So if we go into a real bear market, everything goes down and everything gets wrecked. That usually happens when money supply is contracting and interest rates are going up. We don't have that right now. So the number one scenario I'm working with on this desk is that money's going to rotate. And I think it's going to be rotating into these spaces that I'm talking about. And so that's where our focus is as we build up our portfolio. One of our favorite ideas, we've already booked a profit on Ramco Resources from in here. It blew out, booked our gain, put in a nice reversal pattern here. And then today they announced a shelf for more equity or debt offerings. And so the stock's down 16, 17%. This beautiful. That's just what I'm looking for. Have them bring it down, do the equity offering or the convertible debt deal or whatever it is they're going to do. And when that's priced, we put this position back in the portfolio. Don't forget, this is a coal stock with a rare earth kicker. Okay. So let's wrap up before we go. I got to get out of here, get our live trading desk going. If you have any questions, throw them in the comment section. I'll try to get to them. But here is the last thing for us to talk about. We got to talk about it. We're on the cannabis couch together. It's our Wednesdays when I like to open this up for all of you guys to chat and see what we're up to. Something sneaky is going on in cannabis. Something sneaky. Cannabis stocks are starting to go up at the end of the day, not down. Anybody following the cannabis space knows usually in the last half hour, last 15 minutes, they come in and wreck the price. So you get a nice morning, and then you have this terrible tail down by the end of the day. It's starting to go the other way, right? Something's going on. Don't tell anybody. Shh, just keep it quiet, okay? We closed above the 200-day moving average yesterday. Today, we're attempting to go above the 200-day, which is the exponential. So I look at both exponential and standard. We're above the standard. We're right at the exponential. Nobody knows why they're going up. which is great. I don't want to see any story hit the tape on why they're going up. I'll tell you why they're going up. We'll find out a month from now that congressmen and women who are on subcommittees, who are getting information before us, are starting to buy cannabis stocks. That's what's going to happen, because they'll know ahead of time before there's anything coming out of government that's going to change the lives of cannabis investors and cannabis entrepreneurs. People are going to know before it happens. This is like a prime group for that type of inside information ridiculousness, where people in government get to trade on information before it happens. So all we could do as investors that are not in government is to watch the way it trades, watch the behavior of cannabis. If you keep seeing volume come in at the end of the day and you see the asset close near the highs, you don't have to look around and figure out what it is. Obviously, there's some information out there. We're going to find out what it is. At some point, it'll be MSOS, halted, news pending. I can't wait to see it. Shh. I don't buy strength in cannabis stocks. You better not be buying strength in cannabis stocks. Please. If we've learned anything, we don't do that. So I'm just enjoying the ride here. I'm not on here telling you this to cheerlead and get you to go do something. Please don't do something. Please don't. That's something needed to already be done. Look, we own it down in here, right? That was the double bottom. We talked about it. I was on this channel with you guys talking about it. That was June, right? And we said, here's another opportunity. We closed above the 50-day moving average. That's then it ran up, came down. Okay, there's another opportunity testing the 50. That's it. Everything we want on cannabis is already on. This is all gravy here. This is all profit. Let other people mark up our portfolio and don't get greedy. That's my message to you. I hope you guys have a wonderful trading session. I look forward to working with all ARMR insiders. 9:30, we'll get that started. At the end of the day, whatever you heard me say or anything you read, anything you're watching, guys, you got to figure out your own strategy, risk tolerance goal, all that kind of stuff. Make your own decisions and be the smart money.